Good morning, traders. Well, things change from one day to the next in this market. It happens often. So markets this morning are in an angry mood. Prices are down here. As you can see, the S&Ps are down here 13 and 3/4. They were down a little over 14 before. So they're coming down to the support area. And now the question is this just a trading range prior to new highs? Or does it break lower? So, I put up here M-top, question mark, maybe. Weekly chart is still in an uptrend. So the power is with buyers. So now, can it break below here, which would open up the door, to a possible move it, down to the 50, which as I refer to as a subjective reference point of support. It's widely followed on indices. However, as far as price support goes, there's nothing to the left. They had a momentum move up, so there's nothing there. And this area right here, those of you that are old students will remember the lesson of a price area being neutralized by trading below it and back up above it. In other words, it's been used up as a reference point. Another way of looking at that, it's a more advanced concept from the ATS class that I used to teach, a more advanced concept of, it was used up as a resistance area, used up as a support area, and what you find over time is, the essence of what is left on the chart is directly to the left. And it's hanging right here for now. And if it breaks below, well, it opens up the door to the next price area, which is down here. Now, if we were to break this down into an intraday chart, like a 30-minute or a 60-minute, and we'd look to the left there, we would see, let's see if it'll fill in here to go back that far. I don't know if it will. Yeah, so you can see little reference points there that happened intraday. And what you find is that these reference points, as you look at a higher time frame, in this case a daily chart, you'll see some overlapping bars there. So around 2404, right around here, you'll see that you had some overlap between the days there, and it creates a support area intraday, and that becomes a focal point for intraday traders. But as we look at the daily chart, there's nothing there. So you could have a momentary stopping point on the way down to the next support area, unless, all right, and they have rules to update information on a consistent basis. That's what a trading plan is about, having rules and a way of interpreting prices, unless it can create support. And many times that's through a retest pattern. So right now we have a potential retest pattern going on up here, a possible M-top, and we'll see if that's going to follow through to the downside if it can break through this low here. All right. Now, technical analysis is a process of the analysis of price action. We can add volume, but it's a secondary piece of information. But it's all about the price action. It's really not about the moving averages, although they can come into play when they're widely used, like the ones I'm showing you here. But as far as things like trend lines, Fibonacci lines, that's all holy grail stuff. It's not necessary. Just look directly to the left. In other words, do the analysis horizontally. Just look to the left there, not drawing lines, all over the place. And you'll see that, some traders or gurus or whatever you want to call them, they'll draw lines like this. And when that doesn't work, they'll draw lines like that and another line like this, and even down lines like that are supposed to connect somewhere over here. It's really ridiculous, and I can't say I wasn't a victim of it per se in the past, because that's what is shown, and you think that that's the way it's done. But through several years of questioning the accepted, what was reality was just the price areas to the left, simple support and resistance that was created by money, yours and other traders and mine, as we place trades. And whether they worked or they didn't work, they leave those reference points that we use. The Qs coming down here to test this prior swing low. The nasty move down that everybody saw. Couldn't get very far to the upside here before I moved down. So the question here is, does it come down and test the 50, which there's nothing to the left? Do we get a move down to this area, which seems pretty likely based on the fact that this couldn't retrace very far? And that's what should happen in a bearish move with a wide range bar like this. It cannot trace very far. It doesn't trace more than halfway. And what it's done here is the perfect type of retracement for a bearish pattern, is that it stays in the bottom part of the big red bar, which maybe it's going to hold here, which is what it's trying to do right now pre-market. And then if it doesn't have some significant bounce, well, it opens up the door to moving down here to test this low right there. And then we'll see what it does. And so now that it's swung up here, and so let's just look at this again with another little lesson here. I hope you guys are enjoying these, as this is what I teach in classes. Now that this had come down, as it did, big momentum move, no resistance, right? Here's the void. That's the void that I teach, right? There's the void. There's no resistance here. So now as it's come up and now dropped again, breaking through the major support here on this 30-minute chart, we now have a new reference point of resistance, right? Minor and major resistance, and now it's holding this low. And, just based on the theory of trends and powerful moves, this low should not hold. That doesn't mean we just ignore it. As we can see, prices are beginning to hold here, but the trend is moving to the downside, and so we take it a step by step. And what's directly to the left here, it should stay below this area and then continue, in its bearish move. Okay. All right. So let's look at oil, which is getting beat up again. Certainly looks like it's coming down to the low. You look at the weekly chart, huge area of major support. If it breaks through there, oh boy. So that, right now you just have, a trading range going on. So from a shorter term point of view, yes, we trade these. And of course, as intraday traders, we can take this kind of a move and move into intraday charts and trade them accordingly. From a longer term perspective, not a big deal has happened here. Just holding in this area. Can't get through that area, coming back down to this area again. And so we'll see. Was this a downside shakeout, which will eventually lead to higher prices, or is this going to break lower again and then come way back down to this low and possibly lower? So, we wait. In trading ranges, you can trade the highs, you can trade the lows, you can go to smaller time frames and trade it in between. But now if it breaks through here, then we get a bigger picture bias and view. Bonds pushed up above that resistance area yesterday, closed above it on the daily, got through the 200 MA, right? All good stuff if you want to be long bonds. And of course, that means interest rates are going lower. So here's part of the problem with that from a long-term point of view, is that we know the Fed raised interest rates yesterday. Bonds going up, interest rates coming down, which means eventually, if that trend continues, you'll get an inverted yield curve at some point. I'm not saying it's going to happen, and it's far from that, but you can see what happens when the yield curve inverts. That's when you have a big problem for the market, because this is the only piece of information that is accurately called a recession over decades. And that's why I keep an eye on it. Right? So it doesn't give you information or change of information too often. However, you can see that it's quite accurate at calling tops. And when it gets up into the bullish area, it takes a little while before it takes hold. But that's why we follow the trend. Price is king. Right? So we keep an eye on that. So it is if short-term interest rates, the Fed keeps raising, keeps going up, and bonds continue to push up, bond prices. Interest rates will come down. At some point, the two will meet, and if they meet and invert down here, it's going to be a big problem for the market, as it always has been. Okay. So those are the broader markets. Some stocks that are moving here. One that is of interest is Tesla, which has just been a beast. So strong, it looks fantastic. However, this morning, it's gapping under yesterday's low, which certainly opens up the door to this being, at a minimum, a short-term high and a pullback. And so at that point, we'll look to see where the prior swing low is, which is down here. If it holds there, if it breaks through it, and that would violate the uptrend. But there's plenty of room between where it is now and that point. So something that we'll keep an eye on. And financials, which just look great, having come out of this base here, negating this head and shoulders top. They're holding up here in a pre-market that is weak, still holding up pretty well, showing relative strength. So, those stocks, it was in my list here before. Anyway, you got BAC. A lot of them are choppy. The best looking one right now is Citibank. It looks great, breaking out above that base you can see on the weekly. So we really like this for a higher move. All right, everybody, have a great trading day. Follow the rules. I hope some of these concepts that I'm sharing with you help you in your investing and trading. Visit MasterTrader.com. Join us. Learn